Welcome to the deep dive. Today, we're getting into something that might seem a bit like tax code jargon at first glance.
Yeah, it can sound that way.
But honestly, it's super important for understanding who actually holds power and influence in American politics. We're talking about the different kinds of organizations out there working behind the scenes.
That's right. When you look at, political ads or policy debates, even election campaigns, there's this whole ecosystem of groups operating, and we're going to try and unpack that a bit today.
Exactly. Because look, if you want to figure out who's funding a certain message, or just be a more informed citizen, really, understanding how these groups work, their rules, their money, how transparent they are, it's crucial.
Mm-hmm.
This isn't about taking sides. It's just about knowing the players and the rules of the game.
Yep.
We'll focus on four main types, okay? All defined by the IRS code. 527 political organizations, 501c charities, 501c4 social welfare groups, and 501c6 business leagues.
And yeah, these aren't just random labels. How a group is legally set up has huge implications for what it can actually do, how it raises money, and really importantly, how much we, the public, get to know about all that.
Right. And things like campaign finance laws and, big Supreme Court cases like Citizens United have made choosing the right structure super strategic for these groups.
Definitely. The stakes are high.
Okay, so our mission here is to cut through the legal stuff and give you a clear picture. What's their main goal? What politics can they play? How do they get funded? Who knows who the donors are? What about taxes?
We'll try to hit all those points for each type.
Yeah, and hopefully by the end, you'll see how these differences really shape their roles in politics. So where should we start? Maybe with the 527s. They sound overtly political.
Sounds like a good place to start. So the IRS definition basically says a Section 527 group is organized and run primarily to do one main thing: take in money or spend money for what they call an exempt function.
Okay, exempt function. That's classic IRS talk. What does that actually mean in practice for these 527 groups?
Yeah, let's translate that. Basically, it means trying to influence elections. The official definition is pretty broad, actually.
Yeah.
It covers influencing the selection, nomination, election, or appointment of someone to public office.
Any public office.
Any level, yeah. Federal, state, local, even positions within a political party. And it also includes electing presidential or vice presidential electors. So if the activity is meant to impact an election, probably an exempt function.
Got it. So when we hear 527, technically that could mean anything from a candidate's own campaign committee to those huge groups running ads everywhere.
Technically, yes.
But I feel like in the news, 527 often means something more specific, like not the candidate's campaign itself.
You're right. That's a really key distinction in how the term gets used.
Yeah.
While legally it covers that whole range, in everyday political talks, 527 often refers to those groups focused on issue ads or getting voters out, but maybe aren't registered with the Federal Election Commission as a traditional PACI. Sometimes that's a deliberate move to avoid rules around express advocacy.
Express advocacy. Okay, another term. What's that?
Express advocacy is basically when a message explicitly tells you who to vote for or against. It often uses specific words, people call them magic words, like vote for, elect, support, defeat, reject.
Right, the really direct stuff.
Exactly. Or even if it doesn't use those specific words, if the whole message leaves no doubt that it's telling you to vote one way or the other for a specific candidate.
Okay. So some 527s, like actual PACs or super PACs, do use that direct vote for against language. But other 527s might stick to talking about issues or just urging people to vote without saying who to vote for.
Precisely. And the absolute core thing for all 527s is that political exempt function activity has to be their primary purpose. Influencing elections must be their main reason for existing.
That sounds like a big difference compared to the other groups we'll talk about.
It's crucial. For the 501c groups, political campaign stuff cannot be their primary purpose. This primarily test for 527s was set up back in '75, specifically to handle the tax side of political activity.
So what can these 527s do, politically speaking, under that exempt function idea? Sounds pretty broad.
It really is. Since politics is their main gig, they have a lot of leeway. They can give money directly to campaigns, though traditional PACs have limits there. They can run events to build support for candidates. They can even do things after the election, like help pay off campaign debt. And interestingly, they could support people who haven't even officially announced they're running yet.
Wow, okay. So getting in early. And we mentioned express advocacy, but what about those ads that just hammer on an issue and maybe mention a candidate's record?
Yep. 527s do that too. That's issue advocacy. They can talk about policies relevant to a campaign, highlight where candidates stand, and, of course, voter mobilization, registering voters, encouraging turnout. That's big.
But there are some guardrails, right?
Oh, absolutely. A major one. Whatever they spend money on has to be legal. They can't break campaign finance laws or fund anything illegal. Seems obvious, but yeah.
And what about super PACs? They get talked about constantly. How do they fit into this 527 picture? They make these huge independent spends.
Right. So if a 527 is making independent expenditures, that means ads or communications expressly advocating for or against a candidate, but done totally separate from the campaign.
No coordination.
Zero coordination allowed. That's critical. Super PACs, which are often set up as 527s, really exploded after court cases like SpeechNow.org v. FEC. That ruling essentially said groups making only independent expenditures could take unlimited contributions.
Ah, because it's seen as free speech.
That was the reasoning, yeah. Unlimited contributions for independent spending. So these super PACs, under the 527 tax structure, can raise and spend enormous amounts as long as they stay truly independent. It totally changed the money game in politics.
Unlimited contribution.
Yeah.
That's huge. So generally, how are 527s funded? Who can give and how much?
This is where their influence really comes in. For many 527s, especially the issue advocacy types and the super PACs, they can accept unlimited money from individuals, corporations, and unions.
That's very different from a candidate's campaign.
Totally different. Candidate campaigns and traditional PACs have strict limits on who gives and how much.
But you said traditional PACs are often 527s too, so there are some limits within the 527 world.
Correct. It's confusing, I know. The 527 status itself doesn't set donation limits. But if that 527 is a traditional federal PAC, it must follow federal campaign finance limits, which are currently $5,000 per donor per year to the PACs.
Okay.
And super PACs, again, they're 527s taking unlimited money, but they can only make independent expenditures, no direct donations to candidates. So the 527 is the tax category, but campaign finance law often dictates the specific money rules depending on what kind of 527 committee it is.
Okay, that distinction helps.
Yeah.
Now, transparency. Do we get to see where the money comes from and where it goes for these 527s?
Generally, yes. Compared to some other groups we'll discuss, 527s tend to have more transparency baked in. They're usually required by law to publicly report their donors and their spending to the IRS. Disclosure rules got tighter in the early 2000s.
What kind of info do they have to share? And how often?
Okay, so unless they're exempt, a new 527 has to file a Form 8871. That's the notice they exist electronically with the IRS within 24 hours of setting up.
Wow, fast.
Yeah, and if they miss it, their income could get taxed. Then periodically they file Form 8872 that details contributions and expenditures. If someone gives $200 or more in a year total, the 527 usually has to report the donor's name, address, job, and employer.
Okay.
Same kind of detail if they spend $500 or more on someone's name, address, purpose of the spending. And this Form 8872 also has to be filed electronically.
And can regular folks like us actually see these forms?
Yes, absolutely. The IRS puts these filings online, the 8871 and the 8872s. So you can go look up who's funding these groups and how they're spending the money.
Right.
It's meant for public accountability, given their main goal is political influence.
Are there exceptions? When would a 527 not have to file these IRS reports?
Yeah, a few main ones. If a group is already reporting similar info to the Federal Election Commission, think federal campaigns or traditional PACs, they don't have to double report to the IRS.
Makes sense.
Also, state and local committees might be exempt from IRS filing if they meet certain state reporting requirements. And very small groups, those not expecting to bring in $25,000 a year, are usually exempt too.
So the transparency push for 527s comes from their primary political mission.
Okay. What about taxes? Do these 527 groups themselves pay income tax?
Generally, no. They get tax-exempt status under Section 527A. The idea is their main activity, politics, isn't really a commercial business that should be taxed like a regular corporation.
But you said generally, so sometimes they do pay tax.
Yes. They can be taxed on what's called political organization taxable income. That's mostly net investment, income interest, dividends, rent, capital gains, that kind of thing.
They can deduct expenses related to earning that income, but what's left is taxed at the highest corporate rate, 21% right now. Also, if they make money from activities unrelated to their political function, that could be taxed too.
So the money they spend on ads isn't taxed, but profits from, say, stocks they own might be. What about donors? Can I deduct my contribution to a 527 on my taxes?
Nope. Contributions to a 527 are specifically not tax-deductible as charitable donations, and the 527s have to tell you that. Their fundraising materials must include a clear notice saying contributions aren't deductible.
Good to know. Okay, so that's 527, primarily political, can handle big money, generally disclosed donors, contributions not deductible. Let's pivot now to a totally different beast.
Yeah.
501c3, charitable organizations.
Right. These are the groups most people think of as charities or nonprofits. Churches, schools, food banks, museums, scientific research groups.
One's doing good works.
Exactly. Yeah. To get 501c3 status, a group has to be organized and operated exclusively for specific exempt purposes. The list includes charitable, religious, educational, scientific, literary, testing for public safety, amateur sports, and preventing cruelty to children or animals.
That word exclusively sounds really strict.
It is. It's one of two huge hurdles. First, their main activities must serve those exempt purposes. Second, and this is critical, none of their net earnings can improperly benefit private individuals like founders or board members. That's the private inurement rule.
Break that rule.
Big trouble. Fines, excise taxes, and potentially losing their 501c status altogether. Their money has to serve the public purpose, not enrich insiders.
And within C3s, I hear about public charities versus private foundations. What's the difference there?
Yeah, that's a key split. Public charities usually get broad support from the general public or government grants. They interact more widely. Private foundations typically get their money from fewer sources, maybe one family or corporation, and often do their work by giving grants to other groups. They have slightly different rules.
Okay, so C3s are all about public benefit, get tax breaks for it. How does that square with politics? Can they endorse candidates or play in elections?
Absolutely not.
Yeah.
This is the starkest contrast with 527s. Section 501c3, organizations face an absolute prohibition on participating or intervening, directly or indirectly, in any political campaign for any candidate for elective public office. Full stop.
Wow. Total ban. That's often called the Johnson Amendment.
That's the one. It's a very clear line.
So what counts as breaking that rule? What's forbidden intervention?
Well, the obvious stuff. Explicitly endorsing a candidate, giving money to their campaign, handing out biased campaign literature. But it's broader than that. Using the charity's resources like phones, mailing lists, staff time for partisan campaign work is also forbidden. And even public statements can be tricky. Saying things that clearly show approval or disapproval of a candidate, especially near an election, could cross the line, even without naming names.
So they can't say, vote for Smith or Jones is terrible, but can they talk about the issues the candidates are debating, like climate change or healthcare policy?
Yes, they can engage in issue advocacy. They can take positions on public policy matters. But, and this is crucial, it has to stay strictly nonpartisan.
No favoring one side or candidate.
Exactly. The focus must be purely on the issue, not on influencing the election outcome for a particular person or party.
What about lobbying? Trying to influence laws, not elections.
Lobbying is allowed for 501c3s. They can try to influence legislation. But another big but lobbying cannot be a substantial part of their overall activities.
Substantial part. Sounds vague again.
It is a bit vague under the default IRS test. So many C3s choose to make what's called a 501 election. That lets them operate under clearer, specific spending limits for lobbying. It provides more certainty, but lobbying is distinct from the absolutely banned campaign intervention.
Okay. What about things like voter registration drives or getting people to the polls? Can C3s do that?
Yes, they can, as long as it's completely nonpartisan. General voter registration drives open to everyone, get out the vote efforts that just encourage voting without bias, publishing neutral voter guides, hosting impartial candidate forums. Those are usually okay.
But any hint of favoring one candidate or party
crosses the line. Big problem. And private foundations have some extra rules if they want to fund voter registration.
The consequences for breaking the political ban sound severe.
They are. Losing your 501c3 status is huge. Plus, the organization and maybe even its managers can face steep excise taxes.
Why such a strict separation?
It really comes down to the tax-deductible donations. When you donate to a C3, you often get a tax break. That's like a government subsidy for their good work. Allowing them to use that subsidized money for partisan politics would be like indirectly funding campaigns with public money.
Ah, okay. That makes sense. So you often see a C3 focused on charity and then maybe a separate affiliated, like C4?
Exactly. They'll set up an affiliated 501c4, which we'll get to handle the more direct lobbying or political work, keeping the C clean for its charitable mission and tax-deductible donations.
Okay. So C3s get money from individuals, foundations, corporations, government grants, all wanting to support the mission and often getting that tax deduction.
Right. And the funding sources often distinguish public charities from private foundations, as we mentioned.
What about donor disclosure for C3s? If donations are tax deductible, do we know who's giving?
Generally, no, not for public charities. They do report their substantial donors to the IRS on Schedule B of their annual Form 990 return. But that Schedule B is usually kept confidential. It's not released to the public when the rest of the Form 990 is.
Why keep it secret?
The idea is to protect donor privacy and encourage giving. People might be less likely to donate, especially large amounts, if their names were public. It's a trade-off, promoting charity versus transparency.
A very different approach than the 527s.
Totally different.
Yeah.
Because C3s are banned from electioneering, the argument for political transparency is weaker, while the argument for encouraging charity is stronger. Now, private foundations often do have to disclose their donors, but public charities generally don't.
And just to recap the tax side, C3s themselves are tax exempt.
Correct.
Donations to them are generally tax deductible for the donor.
Under Section 170, yes.
Any other tax wrinkles for the C3 itself?
One main one.
Yeah.
UBIT, or unrelated business income tax. If a C3 runs a business that's not substantially related to its charitable mission, like, say, a university bookstore selling things unrelated to education, the profits from that unrelated business can be taxed.
Got it. Okay, so C3S, charity education focus, strict no politics rule, tax-deductible donations, generally private donors. Let's move to the next category, one that gets a lot of attention and seems murky sometimes. 501c4, social welfare organizations.
Yes, these are really interesting. They kind of sit between the C3's political restrictions and the 527's political focus. Section 501c4 covers civic leagues or groups organized and run exclusively for promoting social welfare. It also covers some local employee groups, but the social welfare part is what's politically relevant.
Promotion of social welfare, like the C3 definition, that sounds pretty broad. What does the IRS count as social welfare?
It is broad. The IRS says it's about promoting the common good and general welfare of the community, things like civic betterment, social improvements. They admit it's not perfectly defined.
So less about specific charity, more about the community good.
Yeah, that's a good way to put it. The key is their activity should primarily benefit the community, not just private interests or their members. Think about groups advocating for policy changes, community projects, public education on issues.
Can you give some examples?
Sure. You see well-known groups across the spectrum as C4s, the NRA, the Sierra Club. Groups like Americans for Prosperity or Organizing for Action have operated as C4s.
Okay. And the big question, what about politics? Can these C4 social welfare groups get involved in elections?
Yes, they can. This is a huge difference from C3. 501c4s are allowed to intervene in political campaigns, including expressly advocating for or against candidates.
But there's a catch, right?
A very big catch. Political campaign activity cannot be the organization's primary activity. Their main focus, most of their resources and effort, must still be on social welfare work. Politics has to be secondary.
Okay, cannot be their primary activity. How do they figure that out? Is it a 50% role or?
That's the million-dollar question and where it gets tricky. There's no clear official percentage threshold from the IRS.
Really?
Nope. They use a facts and circumstances test. They look at everything: spending, staff time, the nature of activities. It's holistic. Now, informally, many groups aim to keep political spending under 50% of total spending, maybe even under 40%, just to be safe. But it's not a hard legal line.
That ambiguity sounds like it gives them a lot of wiggle room.
It does. It offers significant flexibility. They can do a fair amount of political work as long as they can argue their main focus is still social welfare.
So some politics allowed, but social welfare first. What about lobbying for C4s? Any limits there?
No limits. Unlike political campaign work, 501c4s can do unlimited lobbying as long as it relates to their social welfare purpose. This is a major reason why advocacy groups choose C4 status. They can lobby lawmakers aggressively.
Unlimited lobbying, some political activity allowed. And do they need to worry about coordinating with campaigns, like super PACs?
Generally, yes. If their spending counts as express advocacy, they typically need to do it independently without coordinating with the candidate or party to avoid potentially being treated as making direct potentially illegal contributions.
Okay, so this structure some politics, unlimited lobbying sounds powerful. And I know the term dark money gets thrown around a lot with C4s. Why is that?
That connection comes from combining their ability to engage in politics with their donor disclosure rules, or lack thereof.
Let's get into the money then. How are C4s funded? Limits on contributions.
Like super PACs, generally no federal limits. They can accept unlimited amounts of money from individuals, corporations, unions. This ability to take huge, unrestricted checks is key to their influence.
Unlimited money. And do we know who's giving it? Back to the dark money point.
This is the core of the dark money issue. Under federal law, 501c4s generally do not have to publicly disclose their donors.
So totally secret.
Well, they do report donors to the IRS on that confidential Schedule B of the Form 990, just like C3s. But again, that schedule is typically not made public. So the IRS knows, but the public doesn't.
So they can spend millions on political ads, and we don't know who paid for it.
Often, yes. That's precisely the criticism. It allows for anonymous influence on elections and policy debates. Now, some states have their own disclosure rules for state-level activity or ballot measures, but federally, for their general operations and political spending, donor identity is usually protected.
Why is that allowed, given their political involvement?
It stems from their historical classification. They're primarily social welfare groups, not political groups like 527s. So they historically got the same donor confidentiality as other C groups. Citizens United let them spend more money on politics, but it didn't change the underlying IRS disclosure rules for the C4 organization itself.
So unlimited, often anonymous funding. Tax implications. Are they tax exempt? Are donations deductible?
They are tax exempt themselves. But crucial difference from C3 donations to a 501c4 are not tax deductible as charitable contributions.
Okay.
And donors usually can't write them off as business expenses either, especially if the money funds lobbying or politics. So C4s typically tell donors up front, your contribution isn't deductible.
Didn't we mention a potential tax on their political spending earlier, similar to 527s?
Yes, good memory. Under Section 527, if a C4 spends money on political campaign activity, an exempt function, they might owe tax.
Yeah.
It's calculated at the highest corporate rate, 21%.
There sounds like a but.
But it's only on the lesser of either their net investment income for the year or are their total political spending.
So if they don't have much investment income.
Exactly. If they're funded mostly by current donations, not a big endowment generating interest, their net investment income might be low. That means the base for the tax is low, even if their political spending is high, as long as it's still secondary overall.
So that tax might not actually curb their political spending much.
Often, it doesn't have a huge impact for contribution funded. It's a loophole, some argue. They can also manage it by setting up separate funds or affiliated pays for political work.
Okay, so C4, social welfare primary, politics secondary, unlimited lobbying, unlimited and often anonymous non-deductible donations. Let's tackle the last one, 501c6, business leagues.
Right. Section 501c6 covers groups like business leagues, chambers of commerce, real estate boards, trade associations, even professional football leagues, oddly enough. Like other C groups, they're nonprofits, no private inurement allowed.
What's their main purpose? Sounds pretty specific.
It is. Their primary goal is to promote the common business interest of their members. Not helping one specific company, but improving conditions for an entire industry or line of business, or for businesses in a community.
Like a trade association lobbying for industry-friendly rules.
Exactly. Or conducting industry research, setting standards. Chambers of commerce promote general local business interests. Professional societies advance a whole profession.
Okay, promoting common business interests. What about politics and lobbying for them? Is it similar to the C4?
Largely, yes. The rules really mirror the C4s here. 501c6s can engage in political campaign intervention, express advocacy included, but again, it cannot be their primary activity. Their main focus must remain promoting that common business interest. Politics has to be secondary. Same vague facts and circumstances test applies to judge what's primary.
And lobbying.
Unlimited lobbying allowed, as long as it's related to their purpose promoting common business interests, which, for many trade associations, is a core reason they exist, influencing laws affecting their industry.
So politically, they function a lot like C4s, just with a different core mission, business interests versus social welfare. Same potential tax on political spending, too.
Yep. Same potential Section 527F tax, limited by net investment income, applies if they spend on campaigns.
How are these C groups funded? Mostly membership dues, I assume.
That's the main source, yeah. Dues from member companies or professionals. They might also get money from conferences, trade shows, publications. And like Vifor, no federal limits on the dues or contributions they receive.
And donor member disclosure. Is it secret, like C4s?
Generally, yes. Similar to C4s, under federal law, 501c6s typically do not have to publicly disclose who their members are or how much they pay in dues. Membership lists are usually confidential.
Okay, another potential source of less than transparent influence. What about the tax side for CSIS? They're tax-exempt. Donations aren't charitable deductions.
Correct on both counts. Exempt from federal income tax. Direct contributions aren't charitably deductible.
But you mentioned something different about the dues people pay to join a C6.
Yes, this is the key differentiator from C4s on the tax front. Membership dues paid to a 501c6 might be deductible for the member as an ordinary and necessary business expense under Section 162.
Ah, so the member might get a tax break for paying dues.
Exactly. That can be a big draw for businesses or professionals to join.
But what if the C6 uses those dues for lobbying or politics, since those expenses usually aren't deductible business expenses?
Excellent point. That creates a compliance issue. The C6 can't let members indirectly deduct non-deductible lobbying political costs via their dues. So they have two main ways to handle this under Section 162E.
Okay, what are the options?
Option 1. They notify their members what percentage of their dues went to non-deductible lobbying and political activity. The member then cannot deduct that portion of their dues.
So the member takes a smaller deduction.
Right. Option 2. The 501c6 organization itself pays a proxy tax to the IRS on the amount of its non-deductible lobbying and political spending. The tax is at the highest corporate rate, 21%.
And if the C6 pays the proxy tax?
Then the members can generally deduct their full dues. This whole mechanism forces C6 to track and account for their political and lobbying spending, either telling members or paying the tax. It adds a layer of tracking that C6 don't necessarily have in the same way regarding deductibility.
And this proxy tax is separate from that other potential tax on political spending based on investment income.
Yes. The Section 527F tax is a separate issue, potentially applying just like for C46, based on the lesser of investment income or political spending. The proxy tax relates specifically to the deductibility of member dues.
Wow, okay. That's a lot to digest across these four types.
Mm-hmm.
So stepping back now, looking at 527s, C4s, and C6s together, what are the absolute crunch time differences that shape how they operate in politics?
I think the biggest one is just the allowable level of political activity. It's a spectrum, right? C3s, none. C4s and C6s, some, but not primary. 527s, primarily political. That dictates so much about their strategy and purpose.
And transparency follows from that, it seems.
Big time. You have the generally high disclosure for 527s versus the general confidentiality for donors to C3 sewers and C6s at the federal level. That dark money issue, especially with C4s and C6s, is a massive ongoing debate about transparency versus privacy.
And the money itself, where it comes from and the lack of limits for some, that's obviously huge post-Citizens United.
Absolutely. The ability of super PACs, as 527s, C4s, and C6s, to take unlimited funds from corporations, unions, individuals, that dramatically shapes the funding landscape. And we see groups cleverly using affiliates, like pairing a C3 with a C4, to play by different rule books simultaneously.
And finally, the tax rules themselves drive behavior, right? Deductibility for C3 donations means strict political limits. No deductibility for 527s and C4s gives more political freedom. And that weird potential business deduction for C6 dues adds another layer.
Precisely. The tax code isn't neutral here. It actively shapes the incentives and constraints for each type of organization. It influences fundraising, strategy, everything.
It's definitely a tangled web. But I have to say, breaking down these four types, 527, 501c3, 501c4, 501c6, feels like getting a decoder ring for a big part of American politics.
It really is fundamental. Understanding how these different structures exist and interact helps explain how resources get deployed legally in the political world. The rise of super PACs and politically active C4s after Citizens United really highlights how groups adapt and use these structures.
They pick the structure that fits their goals, maybe use affiliates. It shapes the money flow, the messaging, the influence.
And it fuels all those debates about campaign finance, disclosure, and accountability that we keep having.
So yeah, it might sound technical, but knowing the difference between a 527, a C4, and a C6 is just essential if you want to understand the forces shaping politics today. Each one has its own rule book for what it can do, how it raises money, and who gets to know about it.
That's really the core takeaway. They're not just random numbers. They're the blueprints for so much political action.
And maybe a final thought for you listening right now, thinking about these different rules, especially the varying levels of transparency. What do you think is the right balance for a healthy democracy? Does the current system work? What questions does knowing this raise for you about how influence really works in America?
Yeah, it's worth mulling over. There are no easy answers.
Definitely food for thought. And, the laws and regulations around this stuff are always shifting, so it's a story that's constantly evolving. Thanks for taking this deep dive with us.